Yo, what's up guys? It is Justin back with a new video for you guys. Today we're going to be going over draw on liquidity, and I'm going to try to simplify this as much as possible for you guys and kind of how I use draw on liquidity. How do I understand what the draw on liquidity is? It's actually not as hard as you may think. The more experience that I've kind of built up with, trading ICT and, using PD arrays, the biggest thing that I like to use them for and how do I understand the draw on liquidity is by looking at the validation of certain PD arrays. So in this video, we're going to kind of mostly focus on that. So let's just kind of jump right in. So now what is the draw on liquidity? Now, when I say draw on liquidity, we know markets like to hunt liquidity, and we know most of the time it's going to be, some sort of, significant high, significant low. You can see it on a bigger time frame, looking at like the 4-hour or the daily time frame right now on NQ. We can see that we have clear buy side being, this high here. Our external sell side would be, this low, stuff like that, right? So my biggest bias, and when I try to form my daily bias, or I'm, want to have any sort of bias when I need a trade, I want to understand what the draw is, meaning where do I think the market is heading to take liquidity, right? Because if I think the draw on liquidity is higher, I'm not going to look to take a short position, right? If I think the draw on liquidity is lower, then that gives me even more confirmation to take a short position, right? So going into this, just jumping right in, I want to talk about the validation and invalidation of certain PD arrays. So just kind of looking at the market right now, when I go into a day and I'm like, okay, I want to figure out, what the draw on liquidity is, right? Number one, I want to use PD arrays for my range. So fair value gaps, order blocks, whatever it is. So I can see on NQ, right? Bigger time frame wise, we're coming up. We just pulled back to this daily fair value gap. And now we're starting to, bounce off of it, right? So looking at the 4-hour time frame, I zoom down and I'm like, okay, we just took out sell side liquidity here, right? And we're bouncing off this 4-hour time frame. Okay, but it looks like we have a 4-hour bearish fair value gap here, right? This is a bearish fair value gap. So when I zoom in, I expect to possibly, see this get disrespected. So let me take off the daily fair value gap here so I can get a little clear. And we go on a 15-minute time frame, and we also have, a high here. So if I have a high here, right? This is now, my internal, buy side, whatever it is. I, sell side down here. Now, if we end up coming up, right, and rejecting this and coming lower, I would expect to, continue to see a sell-off, right? We're rejecting a 4-hour fair value gap. We're rejecting a 15-minute fair value gap. We also have this 15-minute fair value gap here. Now, I basically say this. I go into the day and saying, okay, I am bearish, right, until this happens. And looking at this case, I know we just swept sell side. So if we don't sweep this high, what is this going to become? This is going to become a bigger time frame, probably market structure shift. So I'm saying, okay, I think the draw is lower currently. If I look at replay, right, if I'm looking at currently right now, I'm going to say, okay, I think the draw is lower. Now, unless we break through this fair value gap, right, disrespect a bearish fair value gap, then I can expect the draw to be higher, right? But right now, we're coming up, we're rejecting this fair value gap. I would expect the draw on liquidity to be lower until some sort of bearish PD array is getting disrespected. So we have a 1-hour fair value gap right here. It's bearish, and we so far are rejecting this. Now, notice, we end up breaking right through it. What can I expect? If we're breaking through this fair value gap and this 4-hour fair value gap, I'm expecting the next draw on liquidity to be whatever that previous high is. So this would be the draw on liquidity. And I have now confidence with this. So I'm no longer looking to take any sort of short position here because we've just invalidated and disrespected every sort of bearish fair value gap. We have a 1-hour fair value gap here, right? We have another 1-hour fair value gap here, right? Everything is getting disrespected, absolutely running through this. So now this gives me confidence that the draw on liquidity now becomes that high, right? And this becomes on any time frame. Let's zoom in. Let's go down to a 5-minute here, right? Same thing here. We're rejecting this big fair value gap. We just swept this high. We have a 5-minute bearish fair value gap. What do I expect? I expect this to reject and head lower. What happens when we end up breaking through this? What can I expect the draw to be, right? We have a bearish fair value gap. We're rejecting. If this is rejecting, what can I expect? I can expect to see this low. We never even saw that low. So when we come up and end up pushing right through this, what can I expect the draw to be? Whatever that recent high is. So I flip my bias and say, okay, markets don't want to go lower right now. Draw on liquidity is going to be higher. So I flip my bias, right? Because we're disrespecting this bearish PD array. Same thing with right here. if I'm bearish, I don't even need to wait to see this. I really don't even need to wait until, if I'm in like, let's say I'm short here, right? I enter short, my stop, whatever it is, and I'm targeting, my first PT, and then I'm targeting that low. If markets come down, we don't sweep this, and then we end up invalidating this bearish fair value gap, I automatically know that that's not what we should be doing. If we're completely bearish right now, we just swept this high, we should see lower, right? Everything is in favor. We should be very, very bearish. If we're disrespecting this fair value gap, right when we get above this, I'm probably going to close my position because I know the draw on liquidity is probably going to be higher now. So even on the 5-minute, let's zoom in, right? Same thing. If we see a push up, right, all of these fair value gaps here are being disrespected. We're absolutely running through them. What do I expect? The draw on liquidity is probably going to be higher now, right? So let's look at just literally anywhere on a chart you can use this, right? So let's take off replay. Actually, maybe let's go to 1 hour here and keep going, right? So if we're getting a big move up, right, and we come back down, what does this now become? Again, look at the 4 hour. We're invalidating. What can I expect? What does this now become? All of these bearish fair value gaps, we have liquidity swept, bigger time frame. This would now become our market structure shift, right? We're invalidating all these PD arrays. What can I expect the draw on liquidity to be? This high. So now what does this become? This fair value gap now becomes inverse fair value gap. So when we come back down to this, we overlap whatever is, presenting to us. We have a big 4 hour. We have a huge 4 hour fair value gap that we're coming back into. We have a 1 hour fair value gap that we're coming back into. And we have this one hour inverse fair value gap, right? We're aligning all these things. Okay, now we zoom in, right? So this gives me confidence. I'm like, all right, so now I go into the day. I'm like, okay, my draw on liquidity is higher. Let me zoom in now because we're on a 1 hour. All right, so now what? All right, we just swept liquidity, right? We just swept all of these lows here, right? Sell side. So now I'm starting to align all these biases. So I'm bullish on a bigger time frame. I'm bullish now on a smaller time frame because we just swept liquidity. I'm super bullish because we just starting to bounce off this inverse fair value gap. We're in a 4 hour fair value gap. So the easy draw on liquidity now becomes this high, right? Again, same thing. Looking at this, liquidity swept. If this bearish fair value gap gets disrespected, which it looks like it is right now, right? Let's look what happens. Next candle, starting to reject. Then boom, there we go. We end up breaking through. What can I expect? Draw on liquidity to be this high, right? We're invalidating all these bearish PD arrays, but look, you're like, wait, we've just, been selling off or we've been selling off. Notice no other fair value gap or any sort of bearish PD array has been getting disrespected. We come up, instantly reject, sell back off. Now that we're in this fair value gap, we swept this low, big displacement back up. I'm bullish on a bigger time frame. The draw on liquidity is higher. The draw on liquidity is higher on a smaller time frame. This is when you get high quality setups, is when all of these things start to align. So again, looking at this, what would be my long entry? Market structure shift right here, right? We get displacement to the upside. You have that 5-minute fair value gap that ended up getting tapped in, right? This would have been your entry right here. Once we close above, tap back in. And I could possibly look to take another setup, right? Possibly look to take another because we have a clear draw on liquidity, right? So now I'm zoomed into a 5-minute. I'm like, all right, I know that the market's going to go higher. So like, let me zoom in. All right, maybe I can look to take, a pullback to a fair value gap, whatever it is, right? But I'm expecting probably a clean move to the upside, right? I'm expecting that clear draw to be that high, right? So whatever it is, you can, maybe, play a pullback to a discount, right? As long as you're managing risk correctly, that's the biggest thing. There we go. We pull back to this 5-minute fair value gap, right? We'll see if that gets tapped in. End up bouncing, right? What am I expecting to draw? Every sort of time frame is starting to align, right? Clear draw on liquidity is that high. There you go. Ends up getting tapped. Now what? Now, what does this become on a bigger time frame? So now I'm like, all right, if I'm bullish, which I am on a bigger time frame, right? I still think the draw is that high, but I do have to keep in mind, I'm like, all right, I'm still bullish. Now, notice that we don't really displace above this high. So I'm going to continue to possibly now be bearish because we've just come and swept this high. Now, I have to take into account, I'm bullish on a bigger time frame. I still think the draw is here, right? We've bounced off this fair value gap, but now that we're starting to displace back lower, I want to wait and see a continuation back up, right? Because now we're starting to displace lower. That could possibly be a short model, right? Letting the market kind of do its thing. You get a short model here, right? All of the, notice, bullish fair value gaps starting to get disrespected. What can the draw now be, right? We just broke through this big fair value gap here. We're starting to form a short model. You can see external swept, internal swept. You get market structure shift. Pull back to that fair value gap, right? This is a perfect short model to the downside, right? So again, I zoom back out. I reassess my bias now. I might be still long bias on a bigger time frame, but right now it's like, all right, I want to let the market, do its thing because we just swept that high. We're starting to displace lower. I could possibly expect the draw on liquidity to be this low now. Oh, now we're starting to get some displacement back to the upside. Okay, so now what do we see get disrespected? All of these fair value gaps that we had on the left, right? All of these bearish fair value gaps that we had before are getting disrespected. Okay. Also, what is getting respected, right? That's the biggest thing we want to pay attention to. Are we getting respected of bullish fair value gaps? Are bearish fair value gaps getting disrespected? Is the draw higher? Is the draw lower? So looking at this specific example, we know the draw's higher. We're respecting a bullish fair value gap, right? Come down, bounce once again. We're disrespecting bearish fair value gaps on the side here. We're respecting short-term bullish fair value gaps. So we come back, bullish fair value gap. What can I expect the draw on liquidity to be? This high and that external high, right? The draw on liquidity clearly becomes those highs, right? And there you go. We come up, run those highs, right? This is where you start aligning all those biases, right? That's the best way to do it. Let's look at some more examples. Literally just let the market go, and we could see, right? Just understanding draw on liquidity about what's getting validated, what's getting invalidated. You can see we just ran through this, right? If I was looking at this, right? Let's look at this. Accidentally just, here. Replay, boom. So if we're coming here, right? We just swept this high. If I'm bullish, right? This would be internal swept. So I would not look to take any sort of long here, right? Because we just swept that external high, right? So I'm more likely bearish. So what's going to validate my bias even more? Seeing any sort of bullish PD array get disrespected. All right, we have one here. Now, this one's going to be the biggest one because this one's in discount, right? This one, not so much because we just swept that high. I'm probably expecting us to come down. So when we end up coming down and we end up just going right through that, right? What does the draw then become? That low. So I zoom in, right? I have clear draw on liquidity that it's probably going to be this low. End up selling off. Now, what does this become on a bigger time frame? This now becomes probably possible market structure shift, right? Again, still respecting short-term fair value gaps, right? Every sort of bearish PD array still getting respected. All right, so the draw is probably going to be lower, right? Whether it be a fair value gap being the draw, whether it be a significant low being the draw, right? Until we start seeing some signs that any sort of PD array is possibly getting disrespected, that is when we can maybe flip our bias. For example, let's looking at this fair value gap here. Has not been touched into yet, right? Gets touched into. If we break through this, I can maybe expect to draw. Oh, okay, now we broke through it, right? So does this now become inverse fair value gap? I want to wait and see. But I also got to pay attention. Bigger time frame wise, this could be market structure shift, pulling back, right? But to me, this looks like we're invalidating this, possibly pulling back to discount. So this would be more lower probable, right? I would want to see how we react here. On a 5-minute, we're pulling back into a bullish fair value gap. So now there's two things we're paying attention to, right? We have a bearish fair value gap and a bullish fair value gap. Which one's going to get respected? Which one's getting disrespected? Right now, we can see, okay, bearish fair value gap's getting disrespected. Okay, is the bullish fair value gap getting respected? Let's see. Oh, it is getting respected. Okay, what is the draw? Probably higher. Let's see what happens. Still holding. Again, I'm still bullish until we get disrespected. Now that we broke through this, 5 minutes still holding. Again, 5 minutes still holding. So what do I expect the draw to be? Probably this high. So this now becomes market structure shift, pull back to discount, right? That wick does the damage. The bodies show the narrative. We pull back to discount. All of your little stops get stopped out right there. Still broke through it. Again, holding on a bigger time frame. Once we displace back up, big volume, draw becomes that previous high. Still holding, bigger time frame, still holding. Again, what's getting respected, what's getting disrespected? Bearish fair value gaps getting disrespected, bullish fair value gaps getting respected. Smaller time frame, the draw is probably higher. There you go. High gets hit, and you continue to reassess your bias by using structure. Right? So let's literally continue. Just go. Let the market go. Look at some more examples. Boom, we're coming up. What's getting respected? What's getting disrespected? Now, if I'm bearish here, right, and we just swept this level, and we're pulling back to these fair value gaps, I should expect these fair value gaps to get respected, right? Because this is now our short model. External swept, market structure shift, pulling back to this fair value gap. If this fair value gap gets disrespected, which it is, what do I expect the draw on liquidity to be? whatever that recent high is. Also, zooming out, right? Bigger time frame. What is this? Low resistance liquidity run. No really significant high here. So what's the next draw? Possibly the next high. So zooming back in, what can I expect this now to become? We have a bearish fair value gap getting disrespected. We're now pulling back into a bullish fair value gap, bouncing off of it. What does the draw become? These highs. See what happens? Again, until we disrespect this fair value gap, or actually probably this one, again, this one would be more because it's in discount, right? So this would be it. This is what we want to pay attention to. Are we going to respect this fair value gap, or are we going to disrespect this fair value gap? That's what we want to pay attention to. Bouncing. Now we're respecting it. What can I expect? We have a fair value gap created. This would be a possible long entry. Do we pull back into this? Long, where would you be targeting? Buy side. Again, what's being respected? What's being disrespected? All these bearish fair value gaps getting ran through. Pull back to discount fair value gap. What is the overall draw in a bigger time frame? Higher. What's the draw in a smaller time frame? Higher. Okay? Let the market do its thing. End up coming down. Probably got stopped. Again, your next draw would be this previous high. You would take off, get stopped. Or half off would be at the high, and then you rest at break even. Or this will actually be market open next day. Coming down. Again, what's getting respected? What's getting disrespected? We have a bounce here. Never swept this low, though. Is this fair value gap going to get respected or disrespected? Starting to respect it so far. Looking at a smaller time frame, we now have a 15-minute bearish fair value gap. So if this gets ran through and we're holding this 15-minute bullish fair value gap, I can expect the draw to be here, right? Do we end up breaking? Nope. End up respecting the bearish fair value gap. So I could expect the draw to be lower. Extend, still respecting. Oh, actually, disrespecting bearish fair value gap. Right when we go through that, what can I expect? Possibly a bigger push up. Still, this now looks at this. Bullish fair value gap. Once we break through this, inverse fair value gap. Again, breaking through this now. This is what the problem was this week, though. This is what we want to pay attention to. When any sort of PD array is getting disrespected, right? Notice, not a lot of things are holding here. Bullish fair value gap gets broken through. Okay. Once we come down, what is the draw? Okay, we don't. Bearish fair value gap here gets disrespected. Okay. Inverse fair value gap gets disrespected. When we get any PD array getting disrespected, that's a sign that you probably shouldn't trade. That's not good market conditions, right? So let's look at some more examples. Literally just speed the market up a little bit, get some better price action. Again, bigger time frame, right? Still looking at this. What's getting respected? This inverse fair value gap still getting respected, right? Now, let's zoom out here as well. We have a big 1 hour fair value gap here, right? Boom. We're breaking through this. What can I expect the draw to be, right? We came down, still respecting that inverse fair value gap. Draw on liquidity still becomes that high, right? We're breaking through this inverse fair value gap. What can I expect the draw to be, right? This becomes low resistance liquidity run. I'm expecting a move up. We have a bullish fair value gap here. Let's see if this gets respected. Smaller time frame. And this is where you could possibly look to take some sort of, short term. And then there you go. The draw on liquidity gets taken, right? If this inverse fair value gap, or this bearish fair value gap on a 1 hour rejects, right? If this happens here, we come up, reject this back down, I could expect, okay, what's the draw? Probably whatever PD array. So this one right here, right? In discount. I would probably expect us to come back down to this. But since we break through this, any sort of resting buy side above this level is going to be the draw on liquidity. So knowing that knowledge is when I can go into the market and then put risk on the table, wait for a good setup, knowing that the draw on liquidity is, wherever it is, right? Again, all of this, what is this? 1 hour fair value gap. What can I expect to see if we end up breaking through this? Probably higher. Are we going to disrespect this? Waiting, still respecting it, right? Actually, we're actually, this is now where we are present time. So let's go back somewhere like here. All right, coming down, right? What are we respecting on a bigger time frame? Bearish. What can I expect the draw to be? That low. Another fair value gap here on the 1 hour. If this gets disrespected, right? What can I expect the draw to be? This high. So now I'm watching that 1 hour fair value gap, right? So draw gets taken, right? Draw gets taken. So zoom in. Low gets taken. What am I waiting for? Market structure shift to the upside. Boom. Very, very large displacement, right? Breaking through that 1 hour fair value gap, the clear drawn liquidity now becomes this high, right? Equal highs again still. There we go. Now it gets taken. Displacement back to the downside. Bullish fair value gaps getting disrespected. Respecting bearish fair value gaps. 1 hour still getting respected, right? Pulling back. 15-minute fair value gap. Bearish fair value gaps getting respected, right? What could I expect the draw on liquidity to be now? Any sort of recent low. This now becomes low resistance. Big bullish fair value gap here. Could possibly expect this to now get ran through and possibly the draw to now be these equal lows here, right? What would I expect? Displacement back up. Internal swept, external swept, internal swept, displacement back down. Now, really no clear market structure shift, but now that we're coming back, rejecting that fair value gap, I would expect a sell-off. Possibly internal swept here. Again, waiting for displacement back down. Comes up higher. Again, bearish fair value gap now getting disrespected. Once we come up, again, if this is the initial sell-off, and I can see that this is still not going lower, what do I expect the draw to be? Again, bullish fair value gap here. We respect the bearish here, start to sell off. I would expect the draw here. If we don't continue through this, that's a problem. I have to recognize that and say, you know what? I could be on the wrong side of this trade here. So what do you wait for? Any sort of invalidation. If I'm bearish, this needs to get respected. Right when we end up breaking through this, the draw automatically becomes higher. So I have to take that into account. Right when we break through this, I'm more long biased expecting us to go to whatever that recent high is, right? And you can see right after we ended up disrespecting this and then disrespecting this, this now becomes inverse, right? What do we expect? We break through, inverse fair value gap, retests, bounce to go higher. Break through, bearish fair value gap, come back, retest, go higher towards that buy side, right? That whatever that recent high is. Keeping looking. Big sell-off. Again, bigger time frame wise, looking at the daily. Actually, looking at the 4 hour. Come up. What are we respecting? 4 hour fair value gap. 4 hour bearish fair value gap. Come up. Rejects. Now, let me clear the drawings here so we can get a clearer view here. 4 hour fair value gap getting respected. We have equal lows down here, still acting as sell side, so I still want the draw on liquidity to be lower on a smaller time frame. We have a bullish 4 hour fair value gap. Now, if I'm bullish, I want to see this fair value gap hold. If we're bearish and the draw's lower, I want to see this get disrespected. So what do we wait for? Boom. Okay. Breakthrough, retest, starting to reject. What can I expect the draw to be? Look at this. Bullish fair value gap. Boom. Broken through, gets disrespected. Now what are we pulling back to? Bearish fair value gap, starting to be respected. What can I expect the draw on liquidity to be? Still those lows. Again, right? Bullish fair value gap's getting respected or disrespected. Come up, bearish fair value gap gets respected. The draw on liquidity is still lower on a smaller time frame, and there we go. The draw ends up getting taken. Let's go back even further. Literally anything, guys. Any like price action that you can look at, all it is recognizing what's getting respected and what's getting disrespected and using higher time frame draw to base quality setups, right? So again, looking at here, if I'm bullish, that's what I'm waiting for. Displacement up. So we're bullish on a bigger trend. Looking at a 4 hour. We're now coming down. We're bouncing off this 4 hour fair value gap. Now that we're having a displacement, right, we're respecting this 4 hour fair value gap. We get instantaneous move up. What am I expecting to see? I'm expecting to see the draw on liquidity be that previous high. Come down. Retrace back into this fair value gap. Draw on liquidity is that high. Ends up getting taken. Again, all it is, what's getting respected, what's getting disrespected, using higher time frame and using external models, right? Again, a lot of people would take this short here. Once that gets broken through, what do you expect the draw to be? Previous high. Okay, what's getting respected? Coming back down. Inverse fair value gap. Still holding. Now, if this gets broken through, what would I expect? Draw lower. Wicks do the damage. Now this is kind of choppier action because market open, or actually comes back down. Displacement lower. Now, what do I expect all this, right? Bigger time frame, there's probably a bigger fair value gap here. Looking at the 4 hour, we have a big 4 hour fair value gap here, as well as a 1 hour, right? We have a 1 hour here, starting to break through it. Kind of, it's still holding on the bigger time frame. Now that we're really broken through it, right? What do I expect? Draw, probably going to be this low. Coming down. Now, what do we have to see? End up kind of forming relative equal highs. Or relative equal lows. So what are we looking for? Are we going to continue to respect bearish fair value gaps, or are we going to break through them? Looking at the 4 hour. Huge fair value gap here. I want to see this get disrespected. Or I want to see this get respected. Okay, what's happening? Still coming in. I want to see us go back. Right when we break above that, right when we break above this, draw becomes higher. And then buy side gets taken, right? So that's pretty much all it is. When I go into the day and I'm looking at understanding the draw on liquidity, the biggest thing that I'm looking for, what's being respected, what's being disrespected, right? Now, a lot of the time, there's a lot of other things that we look at, but this is what I want you guys to focus on right now, right? Now, I'm probably going to make another video, right? Understanding the models, looking at how models form to understand the draw mixed in with what's being respected. But this is what I want you guys to focus on the most right now, right? Just looking at PD arrays being respected, disrespected, right? And using that to our advantage, right? Now, a lot of the times as well, if you can overlap models saying, okay, for example, this is a perfect example here. When we get something like this, where we get a daily fair value gap, right? Bigger time frame bias. Looking at the 4 hour, we have a bearish fair value gap, right?
Yep.
So we're starting to hold a bullish bias. Liquidity swept, bouncing off the daily. Once we come into this fair value gap here, if this does not reject and go lower, and we end up going right through this, the draw on liquidity becomes higher because we're already starting to play out with our model. If liquidity swept and we're bouncing from the lows, we already think the draw is higher, right? But if we even show more that we're rejecting bearish fair value gaps, that gives us even more confidence that the draw on liquidity is higher. So hopefully you guys enjoyed this video. Hopefully this gave you some sort of value and you can use this going into how you trade and understanding the draw on liquidity. Hopefully this was a simple understanding. I tried not to overcomplicate it that much. I tried to give you guys a bunch of examples, but let me know if this helped you out. Make sure, again, leave a like, leave a comment. A lot more quality videos to come for you guys. So hopefully you guys enjoyed, and I'll see you in the next one. Peace.